What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. We have some great horned owls for company if you are so lucky to hear them in the background of this video. But I appreciate y'all being here, man. Sincerely, I appreciate y'all being here. Tonight, I'm going to be talking to you a little bit more than usual, okay? I've been trying to make these videos quick, to the point. But today, I've got more to talk to you about. All right. Last week on the DJ 30 was a very interesting week to trade. And so we're going to be looking at that week and a specific trade on Thursday. However, the point or the overall message I'm trying to get across with this video is much larger than this single individual trade. All right. I would like to point out some things to you that I've learned over time trading Stacy's system, okay, and attempting to learn, comprehend, and understand the information he's so freely given us, okay, because it's a lot, all right, and we want to make our trading as simple as possible. Stacy's figured out how to make his trading as simple as possible, and we are all attempting to use Stacy's system to simplify our own trading process, okay? So we may not trade exactly like Stacy, but it's still possible to use the information he's given us to consistently turn a profit, right? But we need to understand what's really important about Stacy's work. Stacy hammers the same information into us in every single video, okay? So it's hard to understand what's more important, okay? It's all important, but to me, there are some things that are just more important. I don't know how to explain it other than just saying that. Some things are more important than others in certain respects and at certain levels of your understanding. All right. So I'm talking to you as a beginner to a beginner. All right. I still think of myself as a beginner, even though I've been trading and specifically trading Stacy's stuff for about a year and a half to 2 years. I'm still a beginner. In the trading industry, if your experience is less than 5 years, you are still just a baby. Okay. You're still just starting off. You're still searching for consistency in your trading method and strategy. All right. And what is important when you're starting off? All right. What's important when you're starting off is consistency. It's not important for you to go for big money right from the beginning. Okay. You need to have consistency. Profits follow consistency. So if you can find that consistency in your trading, the profits will inevitably follow. They have to follow consistency. All right. But if you're putting profits before consistency, you're going to be all over the place and you're not going to be able to figure this out in a timely fashion. Okay. And we want to figure this out as quick as possible. The goal for us with trading, we want to understand some key things. We want to be able to answer key questions. For example, what are you looking for? Exactly what are you looking for? Okay. When and where are you looking for this? Why are you looking for this? And how are you going to trade it when you see it? If you can answer those questions, then you have a firm grasp on what you're doing, okay? And if it works and you know exactly what you're looking for, why would you do anything else? Right? That's how you're going to gain some consistency here. Now, Stacy talks a lot about 3-day setups and day counts, okay, and ACBs. In fact, that's what his playbook is all about. And that's also the most confusing thing about Stacy's work. This is what everyone is trying to understand. This is what everyone is trying to understand when they purchase the playbook, okay? When they buy the playbook, they're hoping to be able to understand what a 3-day setup is, how to identify it, how to trade it, how to make that big money, right? That's what it's about. When you look in Stacy's comments, the majority of the questions are all centered around 3-day setups, signal days, and ACB templates. All right. That's like the only questions you're going to see. Hey, Stacy, was this a valid first red day on whatever pair? Hey, Stacy, is this a good example of a 3 days of breakout traders in the market trade on this pair? Okay. Or something like of this nature. Okay. It's all about that. Now, check it out. You do not have to focus on 3-day setups, on day counts, okay, and ACBs in order to consistently turn a profit from the market using Stacy's information. That is the least or the lesser important ideas from Stacy's work. And that might sound crazy to you guys, but hear me out, all right? When you're new, you want to achieve consistency before you aim for profits, okay? But ACBs, 90-10s, 3-day setups, and all of this, the main goal of looking for a 3-day setup and a signal day and all of that is to identify when you are able to size into the market heavily, okay? Maybe you're risking 1% standard, right, on every trade. But if you get a 3-day setup, you might risk 5%. Okay. You might risk 10%. And if you can do that consistently and win those 90-10 trades, you're going to compound your account very quickly, right? Isn't that what Stacy's always telling us? 1 or 2 of these a month can seriously compound your account, right? That's what that's about. That's about making money, big money, fast money, okay? That is for experienced traders, all right, who truly have a grasp and who have mastered their strategy, all right? Not mastered Stacy's strategy, but mastered their own strategy according to the information that they've gleaned from Stacy's videos, okay? So it's not important for you as a new trader who's looking for consistency to try to get rich quick, okay, off of Stacy's system and worry about sizing in. You don't need to worry about sizing in. What you need to worry about is correctly identifying the trades, learning how to get into the market. All right. Regardless of if it's an ACB or not, you need to be able to get into this market when it's appropriate and win your trades in a consistent fashion. Okay. The most important information that Stacy's sharing with us are those 3 key things that every single video without fail, Stacy's going to talk about. Okay. And that is levels, timings, and behavior of price, okay? Or timings, levels, behavior of price. This is the truly important information that Stacy's sharing with us that we can use to identify our trades, all right? Regardless if we're sizing in or not. You understand what I'm saying? So you can use only that bit of the information and forget the rest. Forget about the weekly day count. Forget about opening range, initial balance, midpoint range of the week. Forget about all of that, okay? And only focus on timings, levels, and behavior of price on the day that you are trading, okay? So here we're looking at a daily chart. The whole point of looking at the daily chart, or one of the points of looking at the daily chart, is to determine if you're up high or down low. If you're down low, preferably you'll be looking for buy low scenarios. If we're up high, preferably you'll be looking for sell high scenarios. Okay, we want to buy low, sell high. Everybody knows this. So here we're breaking out of these highs. We've broken out. We're up high. Okay, and you can see looking at the daily chart here on Wednesday, we get a first red day, signal day, up high, all-time highs, first red day. That could be a valid signal. Now we know that when it comes to signal days, we're not automatically selling the market, right? We need to see the right things happen. This again tells you how important timings, levels, and behavior of prices. If the signal day and the 3-day setup, if that was the most important thing, That's what Stacy would be telling you to focus on, but it's not. He's telling you timings, levels, behavior of price. Even if you have 3 days of breakouts in the market, even if you have a first red day at all-time highs, okay? Even if you have that, you are not going to automatically sell. You are going to wait and see what's going on the day, timings, levels, behavior of price, okay? So this is a 15-minute chart of the DJ30 last week. And you can see we have 3 days of breakout traders long in the market when we get to Wednesday. Monday broke Friday's high. Tuesday broke Monday's high. Wednesday broke Tuesday's high. Wednesday becomes our day 3 of breakout traders in the market. Now, we can get the trade on that day, on the day 3, or that day 3 of breakout traders can act as a signal day, alerting us to a potential trade the following day, right? But unfortunately, on Wednesday, we were not able to take that short trade if we were sticking to the strategy because it's well outside of our timing window, aligning with the major red news release at 2:30 in the afternoon. So we missed that. But we have a first red day. Okay. Wednesday closes as a first red day. But we are not going to automatically sell this market. Okay. Instead, we are going to wait for this market to come back up to this level or trade back into the high in some form or fashion before reversing and taking it lower. Okay. Unfortunately, again, we don't get to trade this market short here. This happens just outside of the timing window. Okay. And I'm sure that not so disciplined traders will try to trade outside of the timing window and just get into this. You know, they don't think that they'll ever get another trade again in their life. So they might take that trade a little later in the day. But that's because they don't understand timings, levels, and behavior and price. All right. So let's get into those questions. Exactly what are we looking for? Where and when are we looking for it? Why are we looking for it? And how are we going to trade it? Okay. So what are we looking for? Okay. We're looking for timings, levels, behavior, and price. Okay. So levels. Stacy says, train your eyes to move horizontally at the levels. Okay, so here's our Wednesday levels. Here's our Wednesday high of the day, our Wednesday low of the day. We project those levels onto our chart horizontally. Train your eyes to move horizontally at the levels. All right, and you can see how helpful this can be. Okay, this is our box. All right, now you can see that this market going into New York breaks out of Wednesday's low of the day. This is what we are looking for. We are looking for the market to break either the low or the high of the previous day. Okay, that's when we know that this market is potentially in play. Now, my favorite trades are the reversal trades. So what I want to see is the market break the high of the day and then reverse for a short trade. Or I want to see the market break the low of the day and then reverse and go higher for a long trade. And you can see what happened in this case. This market traded higher into Tokyo and then traded lower until we get to the New York session where we break the low of Wednesday, go sideways, coil sideways, and then explode all the way back up into the previous high of the day levels. All right. We might not have made it all the way back up there, but we traded from the low of the day to the high of the day. Okay. Very good trading opportunity here. But if you were strictly using the signal days and the 3-day setups, you would have missed this trade, or you would have broken other trading rules in order to enter this market short later in the day outside of the timing window. All right. But if you understand these basic ideas of timings, levels, behavior of price, you could have taken this long trade with no worries. Okay. What are we looking for? We're looking for the market to break the previous day's low or high and reverse. All right. When are we looking for that? In the session window. These indexes don't open until 9:30. We really only have an hour of trading, hour and a half of trading from 9:30 to 11 a.m. Okay, so that's when we're looking for it. Where are we looking for it? Again, we are looking for it at the low of the day or the high of the day. Okay, forget closing price. We're looking at it at the low of the day or the high of the day. That is the what, when, and where. Okay, that's timings, levels. Okay, behavior of price. Why are we interested in trading this? Why are we looking for this exact thing? Okay, I've told you guys this all the time. Even though we might be trading on a 1 minute chart to get our entries, we're not trading 1 minute time frame setups. Rather, we want to trade a market that is being driven by higher time frame traders, namely the daily or weekly time frame traders, which means these are traders that are trading using the lowest time frame of the daily or weekly charts, and they're trading the breaks of daily and weekly candles. The same way our entries depend on 1 minute time frame price action, these higher time frame traders, their entries depend on their lower time frame of the daily chart. Okay, so they're waiting for those breaks of daily candles. When those breaks occur, that triggers these higher time frame traders into the market. Okay, so in a case like this, when this happens, right? If these daily time frame traders are going to sell the market when we break the low, right? They're breakout traders. So they're under the impression, they say, okay, the daily candle just broke out of the previous candle's low. So I'm going to sell this because I have a strong belief the market's going to continue to print lower prices. Okay. So they get in there naturally. They're trading daily candle timeframes. So their entry is there at that break. Where is their stop loss going to go? Logically speaking, okay, is going to go at the opposite side of that daily range. So if they're shorting the market, when they enter here and sell here at the break of the previous day's low, their stop loss is automatically going to go above the highs of that daily range, okay, which is all the way up here. So when these traders are triggered into this market and effectively trapped down here, okay, smart money needs a sucker on the other side of their trade. So if smart money is setting up a buy low opportunity like this, they need somebody to be willing to sell low here, unwillingly or unknowingly rather, sell into the low of the day. And believe me, we have plenty of people doing that. All right. You and I were once one of them until we found Stacy, right? So when we break that level, that triggers other time frame traders in the market. We have trapped volume. We have traders who are trapped on the wrong side of the market. And then this market explodes straight to the opposite side of the range. That's why we are looking for this market to break a low or a high at a certain time, okay, and specific levels. That's why. So now we know all of that, and how we're going to trade it is in regards to if you're going to take it long, if you're going to take it short, and where's your stop loss going to be? Where's your profit target going to be? And this is all dependent on the levels as well. So if we know that we only enter the market, we're going to say from two levels, the low of the day or the high of the day. If we are entering the market at the low of the day, okay, we're saying, okay, this is the low of the day and it's being locked in place. It should not go any lower than that. So when we enter this market, our stop loss goes at the low of the day because we know that as soon as we break that low of the day, if that low of the day is broken, then the low of the day is not locked in place. We're continuing to go lower. We are wrong about our long bias, our long thesis here, and we can get out of that market as quickly as possible. Okay. So that our stop loss is going to go there at these structural lows that form the low of the day, right? Our entry for me would go once we break this big bullish candle down here. Once that level is broken, I'm in the market. Stop loss down here. My target is either going to be this Tokyo high, the high of that major red news release, or the high of the previous day, okay? But it's going to be a level to the left, okay, for your target. No matter where you're going to be targeting it, it's going to have to coincide with a level to the left, all right? So that's the how we're going to trade it. So if you can answer, what are you exactly looking for? When and where are you looking for it? Why are you looking for it? And how you're going to trade it? You are on your way to finding that consistency in your trading. And you can see that what's truly important when it comes to trading Stacy's system is timings, levels, behavior of price. That's what should come first and foremost for you. Okay. And then after that, you can start worrying about 3-day setups, weekly day counts, and every other thing that Stacy talks about. Okay. Because that is for experienced traders who are going to be sizing into the market. But as a beginner and as someone who is still searching for consistency, you do not want to be sizing in to your trades. That's a surefire way of blowing your account. Okay. What you need to do is play it safe and find that consistency and then grow from that consistency. That consistency is going to come from a simple daily process, one that's simple enough for you to repeat day in and day out. The only way you can do that is if you know exactly what you're looking for, when you're looking for it, where you're looking for it, why you're looking for it, and what you're going to do when you see it, or in other words, how you're going to trade it. Okay? And all you need to know is timings, levels, behavior, price. You want to see the market break either the high or the low of the day, and then give a reversal pattern and go to the other side, okay? That's what you want to see, okay? Here, we don't get that type of trade, but here we get it. Here we get it, okay? This is just how the market moves. Here on Friday, we break Thursday's low. Train your eyes to move horizontally at the levels before catapulting from low of day to high of day. You understand what I'm saying? This is what we're looking for. This is what really, truly matters when it comes to getting that consistency in your trading and consistently turning a profit every single day. Okay. You do not necessarily need to identify a 3-day setup and a signal day. Okay. What you need to know is what you're looking for on the day. Okay. Because the market is fractal. So every 3-day setup is going to also have on the day of the trade a 3-session setup. And that 3-session setup will have some form of like 3-hour setup inside of all that. So if you know what you're looking for on these smaller time frames, right, on the day, then you can enter these trades and you may only get a session scalp type of opportunity, but you are also going to catch those ACBs when those happen because you're entering these trades based on the same criteria, all right? But you've just done away with everything that's confusing and stuck to the basic stuff. So you're not going to be sizing in, figure out, that comfortable size for you, just risk 1% or whatever for a minute until you understand what's going on. But then you can more rapidly size into your trades, like build up your size over time, like every 2 weeks, add another, zero point zero 0.01 to your lot size or something like that every 2 weeks as you develop that consistency. You'll be able to do that quicker than other people using other strategies that are not as specific and simple as Stacy's work. Okay, so I hope that this sort of makes sense for you. I know it's a longer video than usual, but I appreciate y'all being here. I'm just trying to show you that appreciation by giving you this longer form video and talking about other aspects of trading besides just the trades that I took. But I appreciate y'all, man. Until next time, I hope you continue to free your mind.